Hello, everyone. All right, so we're gonna start with decision making, keep versus replace. Let me just clear all these boxes over here. Okay, this is the last topic we're gonna be learning about. So in this case, we have a company called Mid-Atlantic Manufacturing Company, and it is considering replacing an aging piece of machinery. So we have the option, do we keep the old machine or we buy a new machine? The old machine was purchased 5 years ago and it has 3 years of remaining useful life. So in those 3 years, if we buy a new machine, we can save money in operating cost because the new machine is energy efficient. Okay. So the old machine cost 160 when we bought it. The new machine will cost us 90,000 now. The old machine has accumulated depreciation, so current book value is 60. The market value of the old machine is 12,000. Both have the same useful life remaining, 3 years, so they're comparable. The thing is, the old machine, the variable cost per year is 75,000, and the new machine is 45,000. Salvage value at the end of 3 years of the new machine is 5,000. Right, so we have to make a decision. What do we do? Do we buy the new machine or we keep the old machine? What is going to cost us more in the next 3 years? That's what we're going here. Okay, so the old machine, what is relevant out of all this information? The only relevant cost right here is the variable operating cost per year. Whatever we paid for many years ago, it doesn't matter. It's a sunk cost. We don't need that. So it's not relevant. The book value doesn't matter. We're going to keep the old machine. So this will be keep. If we keep the old machine, we're not selling it. So the book value doesn't mean anything to us. Again, the same as selling it. Okay, we're not, the current market value, irrelevant. Only the 75,000 is relevant. And we have 3 years of useful life. So if we keep the old machine, we're going to be paying 75,000 for the next 3 years. So the total cost to keep the old machine is going to be 225. Now, if we decide to replace it with a new machine, this will be replaced. Okay. In this case, we're going to be paying 90,000 to buy it. Okay. So the cost is going to be, this is savings, by the way, 225, right? So the cost, let's put it negative. It's an outflow of cash, negative 90,000. Okay. This is not savings, it's also cost. Okay. So we can also say it's going to cost us 225. Let's make this a negative, even though if we replace it, this will be savings. The 225 negative. 90,000. Okay. And then we also have the 45,000 that we're going to be paying for the next 3 years. So in that case, it will be 45,000, 3 years. And let's make this a negative as well. Okay. Okay, again, same mistake. Here we go. Negative 45, 3 years. So now we have 45,000 times 3, 135. So this is the purchase price. This is the cost. Variable cost per year. So the total outflow is the 90,000 plus the 135. Look at that. In this case, it's the same. Okay. So in this case, it doesn't really matter. We're indifferent. Okay. But wait, we're not done yet. Okay. So this is the total cost. Oops. If we replace with the new machine, we have the chance of selling the old machine. And if we sell the old machine, we can make 12,000. Okay, it's the trade-in cost. So we can save 12,000 from our cost. This will bring down our cost if we trade in our old machine. So in essence, the net result here is 213 that we're going to be paying. Okay, so this is the outflow. Net outflow, 213. Net outflow, 225. So we should replace. We have a difference of 12,000 between the two. So the answer will be replace because we're going to be saving 12,000 if we do. All right. Okay, now you have a handout. I have the problems of the handout here. So what I would like you to do at this point is for you to take a minute, work the handout problem, or if you don't have the handout, you can just look at this problem right here. Pause the recording, work it on your own. This is a very simple topic, okay? Work it on your own, and then continue with the recording and look at the solution, okay? So I'm just gonna continue, but you should be stopping it right now and solving. All right, so we have this company that is, again, deciding whether to keep the old machine or buy a new machine. We have the original cost. We have the book value, blah, blah, blah. We don't really need that. All we care about is the 2 years remaining life. Disposal value is only relevant if we sell it. Operating cost per year. This is annual. We're going to be using this for 2 years, right? So keep versus replace. So, oops, let me spell here. If we keep, we're going to have to pay 800,000 for the next 2 years. So our total cost, well, let's do the math here, but very simple math, times 2 is 1,600,000. If we replace, we're going to be paying 460 for the next 2 years. So the total cost is 920. So it's cheaper. And not only that it's cheaper, we're also selling the old machine for 40,000. So this is the outflow, okay? Outflow, outflow. And then we also have the savings of 220. Okay, so let's put this in negative. This is a formula. So let's keep it in negative. Go back. So we know this is an outflow. Okay, I keep messing this up. We fix it really quick. So we know this is outflow of cash. Outflow of cash. And then we have an inflow of 40. So what is the net? It's the outflow, right? The cost. Inflow, because we're going to be selling if we replace. This is a sale of all machine. Okay. And then we have net amount of 880. Okay, this is the net outflow. So what is the difference? Okay. So 1,600,000 minus 880. So we have a difference of 720 in favor of replacing. Oh yeah, and I forgot. You're wondering, wait a minute, that's a large number. We forgot we're actually paying for. Let's put it right here. I'm like, oh, that's kind of a large number. Okay, we're also paying the 600,000. That is relevant. Don't forget how much you pay. Okay, 600,000 outflow. Okay, now let's get the new number here. So we have, let me fix this really quick. This is a negative. So let's put the outflows in negative. Okay. So the net outflow will be I know the numbers. Okay. 1,520,000. So now we have a difference of minus 80,000 in favor of replacing. Let's just got this here. All right. It's going to cost a little less to replace than to keep. Again, so you have an outflow of 800,000 per year, 2 years, 1 million point six. If you replace, it's going to cost you 600,000 plus the 2 years of operating cost that you have to pay. So the total is 920 for the operating cost. But then trading value, 40,000, that's the current disposal value right here. So the net outflow is 1,520,000. Okay, so it's going to help if you put it negative and the inflows and positive. So the total outflow is less, okay, if you replace. So we have an 80,000 difference in favor of replacing, okay? All right, let's do the last one in your handout. Here we go. So in this case, very similar. Now we have an annual 2, 3 years, 3 years, the cost, current disposal value. Okay, by now you get the gist of it. You might have repairs. So if you have an old machine that is broken, you might see a problem where you actually have repairs. So that is an extra outflow. Okay, repairs, whatever you pay is an outflow. So you add it to the list of outflows. So to keep, what is the cost? 17,500. And we have 3 years, 3 years, remaining useful life, 3 years. And this again, let's put this in outflows. Okay. So we have 17 times 3. Oh, that's your total outflow. Replace. See what we get here. The cost is 82, the original purchase price. This is the outflow. Okay. And then we have the 14,000. And I keep doing it. I like it. I love Excel, but I keep doing that. So it's in outflows. So we have the 14,500 negative, okay, for the next 3 years. Times 3. Okay. So we have the original outflow plus the maintenance, the annual cash operating cost. All right. So let's see any trading. Yep. Disposal 27. That's an inflow. So outflow. Inflow. Okay. So the net amount is this plus this plus this. So we get 49,000. Right. So again, we should replace. So we have a difference of 3,500 in favor of replacing. All these by coincidence, it's replacing. Do not assume that it's always going to be replacing. Sometimes it could be keeping. Okay. But these are all very similar problems. And this is what you could expect to see in the exam. Okay. But there's more in the review. So make sure you work them. All right. Okay, guys. See you next week.